Mike, thanks so much for being with us. I understand that a lot of these names that are your topics have seen a massive sell-off this year. But beyond just that decline in valuations, what is your overall thesis going into next year?
Yeah, I think my thesis is probably fairly broadly shared. I think that the inflation problem is going to be a fairly persistent one. And if monetary policymakers do their job, they're going to have to maintain higher rates for a longer period of time, I think, than optimists for equities are inclined to believe. And if that's true, then long duration equities, that's kind of what Bob Pisani was just talking about there. You know, the companies that aren't making any money now, the kind of companies that Cathie Wood favors are typically those where you're making a big bet well into the future. I think you want to favor companies that are making money now, have free cash flow. That's important, so you're not borrowing at higher capital costs. So I think that's going to favor businesses that are making money right now. Some of the companies that you have up on the screen right now that I do happen to own, names like Paramount and Warner Brothers, these companies admittedly have some operational problems, but I have a feeling that they're going to get some pressure from shareholders and start to turn that story around a little bit. And some of those other companies are trading at actually quite attractive multiples, big discounts to the market right now.
Yeah, interesting. I have to press a little bit on those media picks because I noted that, you know, Paramount has massive short interest and high debt. And you say that Warner Brothers Discovery needs an activist. I'm curious what you think is going to come from not just those two companies, but the rest of the media sector, and whether you think there could be some consolidation, which is something we've been talking about this week, whether there could be some consolidation despite concern about the regulatory environment.
Yeah, so with respect to consolidation, I think a lot of people are speculating that one of the reasons that Berkshire Hathaway has taken a good-sized chunk in Paramount has to do with exactly that. I think that is a more digestible size company than Warner Brothers is. Warner Brothers does have some good things going for it, like HBO Max, but they have had some real missteps, I think, in terms of the content that they've created over the course of the last year. Some big investments in things that never even made it out. And I think that's going to put some pressure on management to focus on what they're supposed to be doing, which is entertaining their customers. And that those high debt levels also, there is a potential benefit there, which is that creates more leverage to the equity if they do start to see a positive turnaround. So Paramount, I think, there's some speculation the company's just gotten very cheap. You know, their strategic roadmap doesn't make them super attractive because they are trying to make long-term investments. And so for those that are thinking about them as a buyout, that's a little bit of a deterrent, but it is certainly a discount. Warner Brothers has just also gotten exceptionally cheap. As a spin-out, as most of you will know, from T was basically a dividend stub. That's one of the reasons that I own it, because I also own AT&T. And that brings up something else, which is that if you have a situation where you're going to have higher rates, then companies like AT&T and Verizon can potentially benefit, because these are companies that they are making some money right now. They do have positive free cash flow, and they're paying relatively attractive dividends. AT&T cut their dividend before. Both of them are paying dividends of over 6% right now, which some could say is indicative that some people don't believe they can persist. But both dividends are pretty well covered. And AT&T, down very small on the year on a price basis, but net of the dividends actually returned 5% total return for the year. So it's actually one of the year's winners.